everyone. I'm Dale Pinkert, joined by the best team on the net. How's everyone doing in face? Hi, Kevin, Patrick. Baby, how are you? So a lot of people are complaining about the lack of liquidity in the new Bitcoin futures contract. I say this, bring these guys back. Bring them back. You'll have some liquidity then. That's me right there. I'm between these guys' arms, booking a winner. Everyone doing okay? I'm feeling pretty good. Put up our Christmas tree yesterday. Under the tree is a gift I received from Ziggy, 3-in-1 oil for my chair. Hear that? Also, a ForexAnalytix coffee mug under the tree. So I'm ready. I'm ready for Santa. Okay, let's talk about money. So, Euro's still constructive. It came out of this wedge. I'm looking for at least a test of 18.5, 19, and still think there's a shot going into year end that the dollar sells off. Okay, still in that camp. What leads me to believe that it's Euro's a better long than cable is Euro pound continues to perform. It's actually breaking out of the wedge, trying anyway. My rule on wedges is that 100% can be retraced. That would take it up towards 89.80. I wouldn't chase it after this big rally from the false breakdown. But the fact that it's performing the way it is tells me there's more left. I'd buy any pullback if it was offered, say between 780, 760, risking the lows. So we have Grega with us today. So I don't want to take up a lot of time with the markets. I'm ready to pass it. I think I heard Blake's mic. Was it you, buddy?
Yeah, I was being on accident. Sorry about that.
That's okay, buddy. So we have the founder of FX Street with us today, Francesc Riviola. And looking forward to talking to Francesc, asking him about the changes in the FX industry, the impact of crypto on FX brokers, etc. So you have any questions for Francesc today, Blake?
No, you know, I mean, I guess my only question is how's FX Street really navigating through the,
Crypto.
the crypto, as far as the adoption of cryptocurrencies, amongst the general public, and what's FX Street, what's their role in leading the charge because FX Street has been one of those companies since I've been trading the currency markets in early 2000s when I started trading currencies. They've always been on the forefront, leading the kind of the charge, if you will, through the currency market and helping people navigate through. So how are they looking at cryptocurrencies, and what type of role is it playing in their business plan, if you will?
Okay. Yeah. I think that's on everyone's mind. I'm going to ask him that. Maybe we'll find out what his vision was before he formed it. So looking forward to talking to Francesc. He's a heck of a guy. And so I'm wondering where Steve Volge is. We have a lot of central bank action this week, right, Blake? Kind of a week to be careful, which is an oxymoron for trading. But
this is going to be a very dangerous week, and we have about 2 weeks left of decent liquidity, and things are going to get really poor the end of next week. But this is like I'm actually traveling next week. I'll be gone for a couple of days. a holiday party I have to tend to, so I'll be away. Yeah, but the thing is I think that everybody needs to understand that this week is really probably the busier week. This is the week where, you know, if you're going to make some you know, making some hay, this is the week to do it. We have several central banks that are meeting. You know, obviously the biggest one is going to be the Fed, and what the Fed's going to do, you know, as far as, you know, raising rates and teeing it up for the new Fed governor coming in. So it's going to be a pretty busy week, and I'll tell you, I was just reading a positioning report from one of the banks, and they're talking about the heavy accumulation of dollars over the last week, and you know, I think that is a little risk in the market, that people are, you know, pretty long the dollar. Yeah, pretty long the dollar going into the FOMC meeting. So but we'll see.
Yeah, you know, another thing, don't try and make up for your whole year in the last few weeks of the year. Most of the pros have already, you know, closed their books. They're at their, you know, in Bermuda now. They left New York, they went to Bermuda. They're on some island, and basically, you know, it's kind of like trying to make up for your week on a Friday. Don't try and make up for your year in the last couple weeks of trading. Kind of get prepared and ready for a new year when the liquidity comes back, and, you know, preserve your equity going into 2018 is my advice.
Yeah, I'd agree with you, but there is going to be some opportunities this week and next week, so make sure that you guys you know, keep your eyes open and keep your stops tight. This is the week you don't want to let things get away from you. Okay. Because you don't want your whole, you know, year or month to be turned upside down in 1 week.
Blake,
use less leverage.
Good morning, Steve.
Good morning. I just want to tell you that I'm here, and I'm going to be here for another 30 minutes. So I don't know. Do we know exactly when Greg is going to come? How you want to do it, Blake? You want to talk now and Greg later? I have no problem.
It doesn't matter. I was just Dale was asking me a couple of questions. We hadn't heard from you, so
no. Sorry, I was here. Just was responding to an email.
That's fine. I'll be here. I'll be here in about 20 minutes for you.
Yeah, go ahead. Take it away, Stevie.
Okay. Okay. Are you sure, Blake? Because you can go now if it's okay with you, and Greg later. I'm absolutely fine with anything. Totally up to you.
No, it's okay. I will. Let me grab.
No. Go ahead, Steve. No, you. No, it's okay. No, go ahead, you. No, it's all right. How about you?
Okay, let's spend a little bit of time talking about the euro dollar. So we popped out of this this descending wedge, and we bounced a little bit. One of the biggest movers overnight actually was the Kiwi, which I'll come back to in a minute. But the euro dollar, I have to point out that we've popped out of this descending wedge, and I think that that this is you know, setting up for a bullish movement. I've already been long some euro dollar. I've kind of gotten in and out of it a couple of times since Friday. I like it, and I like buying dips in the euro dollar. So now, if you look at the euro, I think we can go to this 118.20, you know, and we can come back down, something like this. This is kind of how I see it, and I really want to be a buyer on dips in the euro dollar. You know, the pound's underperforming, and we're sitting on a trend line here. It's just this is also the breakout point, and you got to be a little careful with the pound. I took some of my position off the table on at the end of last week, and for a slight loss too. And with the pound turning lower and the buy the rumor, sell the news, I'm keeping a core position, but I'm not like super
vulnerable, Blake. You know,
it is. Well, the problem is like, and I pointed out on the week ahead video, is that the pound really looks vulnerable against so many different things. You look at the euro pound, which has had a you know, a real big reversal, which you pointed out on Friday that we had this big reversal here in the euro pound, and then we had all these, you know, the pound pairs like the pound Aussie that was, you know, that completed a flag pattern. The pound New Zealand made lower highs. That's showing a reversal. Matter of fact, this could be setting up for a nice little Gartley pattern here for those of you guys that like this. But I'm a little nervous about the, you know, about shorting the Kiwi here too, and I'll point out that the Kiwi dollar, they announced the new central bank governor, and that's Mr. Orr, I think his name is. Let me double check that. I was just in the middle of doing research this morning, so let me go back and
there's some news on the New York subway. Someone blew off a pipeline.
Hey, I've got to take a call, guys.
Go ahead,
so
buddy.
I'm here.
all right, thanks.
here.
I'll be back.
All right, buddy. Hi, Nick. Thanks for letting us know. Some Meshuggah in New York City. Well, closer you get to Christmas. So, Steve, what's on your radar?
Okay, Blake started from the Euro USD, and you know I'm monitoring the same thing, but I'm not going to go into it because you know he already has a core position here, and I'm also passively long Euro USD, but that's a different story. I don't have an active trade at the moment.
Well, your checking accounts in euros and savings account.
Yeah, not only.
You're always
I'm not going to. Yeah, not only because I'm European. It's okay. It's a different story. I don't want to go into it. So I'm going to leave the Euro USD. Blake is going to go into that, and I bet he's going to cover the pound afterwards. Although nothing much has changed since Friday. I'm also sure that he's going to cover the USD yen, so I'm not going to go into that. But I have quite a lot of things we can check here together. I want us to have a look of. You know, we had a weak CPI print today in the USD NOK. And that actually caused it to break through the 61.8, which, you know, we were flirting with a break there for some time now. I was kind of expecting that. That's why I had two positions to go short. One of them was 8.29 and the other one is 8.39. At the initial spike today, it wasn't actually triggered. But you know, we are very close, and perhaps it will, because for me 840 is a major, a very important level, and you know I'm looking to be to establish that second position here as well, and I will be looking for a return lower. You know, I will tolerate even a move towards the 78.6. So I think that the USD NOK is now entering a very, very important area. Also, if you have a look at the USD SEK, it's banging its head once again in this horizontal resistance area. Perhaps it's going to penetrate through as well, but I think this is also an interesting pair to monitor. We see both of them also display RSI divergence. So another high here would probably qualify this as a three-drive pattern that you love so much, right? So the USD SEK is also something I'm monitoring, and I don't have a trade there at the moment, but I'm looking to establish one. And let's have a look at the Kiwi, because Blake was explaining that we had a change of governor there, and we had a big move overnight. The Kiwi is already 1.2% higher, but despite this being a very strong move, we don't have a confirmation of a reversal yet. Obviously, this is a morning star formation now, so from a candlestick standpoint, this is a very nice pattern. But we're still contained in this triangle we were monitoring. So this is one thing we have to be careful with. And second of all, the 69.70 area, which rejected us the previous time, we had said in advance how important that is, has not been broken yet. So the first step, if you want to be bullish here, is going to be, first of all, to close above this triangle's resistance. The second of all will be to penetrate the 69.70 area. After that, you can have a decent conviction that a rebound might extend further towards, for example, the 200 DMA, which is at 0.71. Okay, but I would advise not to jump the gun because we don't have confirmation yet. The overnight move was very nice, but we haven't done any technical damage to the downtrend yet. Okay, the Aussie obviously has not been following. I mean, we've seen a very tepid rebound from the triple confluence of supports we were looking for. So we do see a reaction from here, but so far it's been extremely muted. This is also one of the reasons why the Aussie Kiwi is finally giving us, you know, one more leg lower that we were looking for. So perhaps, you know, you can interpret this pattern like this, but regardless, I had said plenty of times that it looked like, you know, this was like an ABC perhaps. Greg can have a look at it as well. I think that, you know, this area is really nice, the 1085. We have a horizontal resistance / support area there. The 200 DMA is also converging to the same area. We had these lows here. So I think that the 1082 to 1085 area is very important. I mean, I will be looking for a possible reaction there. I don't think I'm actively looking to try to trade the Aussie Kiwi, but regardless, it's a good thing to know, you know, between the two of them, I mean, Aussie and Kiwi, which one you expect to over or underperform. Okay. Now let's also have a look at the metals, and then I can have a look at a few questions. Let me open that, by the way.
Can I just interrupt to give a definition of 3 drive? I heard you call something out about 3 drives.
Of course.
That I love it. Okay, a 3 drive is not driving by your ex's house 3 times to stalk them. And if you're a golfer, it's not 2 mulligans after you hit the ball off the course. Okay, so at least now people know what a 3 drive is.
I have a personal question for you. Have you ever done that with an ex of yours, by the way?
You know, no, you know, but I have called and hung up. How about you, buddy? Come on.
I think when I was, once when I was
29. I think when I was 29.
19.
Huh?
I think once when I was 19, actually.
Okay, well, okay, that's, you know, that's your first major love affair at that age. So
yes,
I understand how you went nuts. So anyway.
No, I didn't so much go nuts, to be honest. It was more or less curiosity. But yeah, sure.
You're weak, begging for her to come.
Oh no, that I've never done. You know, there is a saying in Greek, but you know, if I translate it, probably the show is going to become PG-17 at least. So you know.
All right. Well,
you know, bottom line, soft translation is that, you know, whatever you beg for, in this case, you know, we're talking about women, it doesn't end up well. You know what I mean? It sours.
Yeah. Okay.
Yeah.
I beg you to carry on with the markets now.
Indeed.
But I think it's good that our community gets some, you know, insights into we're human beings, you know.
Absolutely.
You know, we all struggle with the same stuff. Okay.
Oh, yeah, human nature.
Anyway, that's what a 3 drive isn't. Okay, guys, give me why. If you know it's not stalking your ex 3 times or taking a couple of extra swings at the tee. Okay, go ahead, bro.
You know, silver is struggling to hold that area here. If it actually manages to do so, because as you see, you know, momentum has been extremely strong to the downside, I wouldn't expect that a rebound will easily overcome the 1630 area. if you remember, I closed all my shorts that day, that last down day we had, and I said that I'm expecting that perhaps gold will underperform from that point on silver, and so far, more or less, it has done so.
Great trade, by the way. Nice.
Yeah, thank you. So I'm going to be involved with silver again. If it bounces to 1630, I will reestablish some short positions there. But for the time being, I'm holding, my two entries in gold. And I'm very, very comfortable in the money. My first entry was at 1289. The other one was at 1265. I do believe that a rebound to 1260 might get a rejection here as well. So I'm not seeing any real signs that the metals are about to rebound. And even if they do, I have no reason to believe that the rebounds are going to be anything more than shallow. So I think there's still more downside to come from there. Of course, the market always shows what's true and what's not. Let me have a look at a couple of questions. Euro Kiwi and Euro CAD. Sure. Okay, let's have a look at all the Euro crosses then. Let's have a look at the Euro Aussie, which holds within what is possibly a triangle. Initially, we were looking for this to be an ascending wedge and break lower, but since the pairs started consolidating, a more probable interpretation of this recent price action is a triangle. Okay, if that's the case, then we would expect for it to break higher, but it's too early to say. And as we've said many times, corrective price actions, you cannot not know in advance what kind of form they're going to take, because there are multiple interpretations initially. So you need more price action to determine. For sure, there is nothing really bearish with it at the moment, because this holds up nicely, and as long as it does, and given the undisputed uptrend, I would expect that it's going to break higher sooner or later. Obviously, with the price action we had overnight with the Kiwi, Euro Kiwi does not share the same fate. Obviously, it broke down, and we were actually looking at this horizontal area at around 171.20 as an important support. We did break below it, and we had said last week that a break below that can open the door for even a move down to 167, but that will not be enough to turn us bearish on the Euro Kiwi. So, if you've been short the Euro Kiwi, we're looking for a counter trade, that's fine. I mean, the fact that we broke below this area of support is obviously a good step, but be careful and be nimble, because the general trend remains upwards. So you should be keeping your targets, I would say, rather not very optimistic, let's say. So in my opinion, any real sign of a reversal higher, you should probably trust it, because as you see here, we have been in a clear uptrend since February. So 61.8 is at just below 170. That might, sorry, that's the extension, so forget about what I said. Let's draw some fibs and see where can we find some support here. So let's see. We have the low and the high. Let's change the color and see some areas of support. There we go. So 61.8 is at 169.50. The 50 DMA is also at the same area. That level might create some reaction. Otherwise, as I said, we can extend all the way to 167 roughly. But we will monitor the price action from there. Perhaps we will be trading within a descending channel. That's one possibility. Might end up being a wedge. We'll see. We need more price action. So, might be anything. like something like this. Okay, regardless, if you were short, be careful, probably book some profits at some point. For example, at 169.50 is a good place to book some profits. And you know, keep yourself up to date with what's happening here, because sometimes you can see big reversals, and all the crosses, the euro crosses and the pound crosses with the commodity currencies, sometimes have the ability to create like huge moves in very little time. Let's have a look at the EuroCAD. The EuroCAD remains in this ascending formation. It's not exactly a channel. It's like an expanding triangle. And you know, for me, a very important zone was this horizontal support resistance area just below 150. We came back, we tested it, we did not close below it on a daily closing basis. As long as this area is holding, you know, there is no real reason to look lower. So I know that price action has not been really fast here, but regardless, I think that you need to respect the upside, especially as long as we hold above the 149.50 area. Okay, so I don't think this provides like a great opportunity to trade it either way. If I had to be something, I would still be long. My personal point of view is that there are better and cleaner setups out there, so I would be looking for something else. Okay. Another friend is asking for the pound yen, which we can definitely have a look at. Okay, the pound yen is, as far as we can tell, I mean, we were seeing this as a triangle, but on the other hand, now it looks more like a range, because we got rejected once again from the same area, twice actually. And you know, as long as this 153 area holds, perhaps we might end up having some kind of range trading environment like we have in the euro yen, but the range here is wider. So obviously, you know, as long as we hold this zone, you can try your luck by being short against the highs. If range trading is, you know, something that's appealing to you. Otherwise, there's not much to do, because as long as we remain above this 148 zone that we broke above, you know, some time ago, we obviously cannot turn bearish as well. So you either trade the range or wait for a breakout. That's how it is here. Okay, obviously a break above 153 should extend. Now higher targets there. I have a zone at 156.70. So a break above there might even bring like another 350 pips to the upside. So it doesn't look really bad. My pleasure, mate. Let me see if we have any other questions. Okay, nothing we haven't covered so far. Blake, are you back, mate? Hey, Gregor.
Hey, what's up? How are you?
Good. How have you been?
I'm fine. Just as you know, I was not so much in markets last week, so
recording videos, huh?
Yes, I'm still working on them, so a lot of things to do. But I took some time this weekend and went through some of the charts. So whenever you're done, let me be.
Oh, absolutely, absolutely. Tell us what do you have fresh on the table?
Actually, I like price action of crude oil, especially since last week, which once again turned to the upside.
Yeah, actually.
Do you see chart?
Yeah, we can see your chart. Actually, I think that crude is extremely well behaved, having to do with technical analysis standpoint. It found support at a broken ascending channel at the 56 area. So I think that rebound was perfect. Perfect.
Yeah, actually, this is a trend line from start of October. So clearly, I was not bullish yet on Friday, but since
then you know, I wasn't monitoring at that trend line, but you know, that's nice. If you zoom out, you will see that there is also another trend line that passes from there. So it's like another confluence. Yes, actually, that's what I was looking for. The channel that you have there as wave 1, wave 2, I had drawn it a little bit differently. So I had, you know, the broken channel resistance acting as support this time. So if you connect the blue one, yeah,
Yes.
with the red one top.
Okay, I see.
You see? Yep, that's how I had that channel exactly. Yes.
Yes, yes, I see.
Yes.
So actually, I think that there is definitely no reason to fight the trend. But the best support, as I see right now, probably came from this previous swing high. Okay, because it was acting on a tick. Actually, you can see here at 55.70, we came down to 55.80 or so. So actually, it was a perfect bounce from the previous swing high. And I think that we really should respect what market is doing. Clearly, it's an uptrend, and that was a 3 waves of decline. Okay, so since market turned up clear here with 5 sub waves, I think that there is room for more upside. Here's this 1 hour chart. So actually, this 5 wave of recovery confirms that market has probably completed wave 4 here, and that this was nothing else than just a corrective pullback. So I'm looking for continuation to the upside, either from here or from another retest of 56.70 area. It's important to understand that Mondays can be tricky sometimes. It may not be a real flow yet for the rest of the week. So on Mondays, I noticed that a lot of price actions is reversed or can be retested Monday's open prices on Tuesday or Wednesday. Okay, so I would not be surprised if we see maybe a retest of, as I said, 56.70 and then turn to the upside. But nonetheless, I stay bullish here as long as we are at above 55.78 level. Okay, and clearly, if we take a look on this technical chart, we can see that RSI is still above 50, and it means that we are in a healthy uptrend. Okay, so I will be looking for a move to a new extreme here. And I also shared PIP earlier this morning for FA members. So I think that these are the setups where I want to trade. Okay, because we have everything what actually, when I approach to trading, everything what we need. We have an uptrend in progress. Okay. And we have a new swing high that previously, when it was broken, it turned into a support. We are in an impulsive advance here within wave 3 or wave C, which has a target of 63, because normally you will be looking for a retracement back to the termination point of a lesser degree. And obviously there is room for much, much higher levels. Okay, so we have actually all pieces of the puzzles in place, which that actually suggests we will continue higher. And especially this final part of this current price action, a 3 wave down and an impulsive reaction to the upside on an hourly chart, is actually what I wanted to see before I once again rejoin this trend to the upside. Okay, so these are probably the best examples what kind of trades I take. Okay, I wait on a 3 wave pullback and then on a reaction. Will price action confirm my chart, or will I act a little bit early? I always want to see a confirming price action, and clearly this 5 wave price is my confirming price action that probably we have bottomed here and that we are continuing to the upside.
Gregor, we have a question about the loonie. So I don't know if you have a recent count on the USD CAD, because a friend is asking you about it.
Yes, I can take a look at the dollar CAD for sure. We have to keep in mind that correlation between dollar CAD and crude oil are not working very good lately. Okay, so what I'm looking at dollar CAD is actually that we could see a turn to the upside or continuation higher into wave C. I was looking for a bounce from that lower parallel channel line, which at the same time, as you can see, can be here on the right can be wave B of a head and shoulders pattern, right? So this can be left shoulder, head, and right shoulder. So watch out for this swing high from end of October. If we pass this one, then I think that we are going much higher. However, nothing moves in straight line. We see market now in a wave one here. So what I'm expecting is that once we pass this 1.29 level, or maybe even this one from the end of October, we could experience a pullback first and then make a new strong leg to the upside. Okay, because
we were discussing earlier in the chat room, you know, with Luca about the USD CAD, and I told him that I'm looking also for a break higher, and I would love to be short at around 131, 131.50 at the 61.8. I don't know what's your extended target. I mean, how high would you see it go?
This wave C, you mean here on a daily or on a short term? I'm looking definitely for a retracement towards the 61.8.
Yeah, that's at 131.40 if I remember right.
Yes, but if we consider that this can be a head and shoulders pattern, then you know that targets are definitely much higher.
A lot higher, yeah, a lot higher.
Okay, so I would.
But I don't know. Personally, I really find it hard to believe that it might retrace that much.
Yes, okay, but we still need to respect what market is doing, right?
Yes.
So it's in bullish turn for sure. It moved here impulsively. It made probably a corrective movement, already finished as a flattening wave B. So you know that even if you make only wave C is still similar in distance compared to wave A. So there's definitely a lot of room to catch to the upside, I think.
Ed is asking, do you guys look at the amount of money the Canadian government is spending? Record deficits for this country. Okay, yes, but what are we looking at for at the moment, mate? We are looking at the USD CAD. Do you want to really talk about US government deficits or debt? I mean, unfortunately, there are no perfect economies at the moment, nothing near that. The question always with currencies is, since we are always looking at the, you know, one currency against another, is even if you want to talk on a macro level, is what one economy is doing, you know, against another economy. So it doesn't matter, for example, if economy A is bad and economy B is very bad, you know, because in between them is what matters, you know what I mean? So, okay, yeah, Canadian economy is not perfect, but is the US economy perfect? I wouldn't think so, honestly. Grega,
yes,
I know a lot of people are perplexed with the price action in risk asset, especially stocks. What's your insight? Do you see any sign of a top nearby, or what's your count? What are your expectations for the major indices?
What I still see, just let me try to bring another chart here. Just a second. Well, what I still see is that only US markets are actually trading near the highs. Okay, so still I don't see confirmation for risk on mode from other global indices. So I would be very careful here, especially as you know, Fed will likely increase rates. So I don't know how this will impact the situation here, but I think that we could see some limited upside later this week on stocks. So I would be really careful going long here, since I think that there's a greater risk about potential downside, and I'm still bearish on DAX, and this is probably one of my primary markets in clear patterns why I'm trying to look for potential reversal lower into risk off modes. So here I have this chart. Just a second. Okay, so you can see here we have DAX at the bottom, okay? Then we have Nikkei here in the middle and S&P at the top. So as you can see, those two that are lower are not confirming the current rise that we see on the S&P 500. So my assumption would be if we are in a corrective phase here, which clearly looks like a correction on DAX, and if we get a new leg to the downside, then I think that US markets will either stay trapped in a range or maybe even be pulled to the downside as well. So I would be really careful here. Also, I see here market making and moving higher within a wave 5. Of course, this fifth wave can make another 50-point movement to the upside, but I would just keep an eye on this trend line support. Or within a fifth wave, if we can break and take prices below the trend line, and if at the same time DAX will show us evidences for a drop into a wave C, then you really should watch out for much lower prices. So if we take a look on DAX, is that I'm looking, as you can see here, I was looking for a move towards this 138.2% extension and 161.8 of wave 4. So normally when I'm looking for fifth wave advance, this is my minimum expectations. And since market turned perfectly away from that level, clearly in a very strong and in impulsive fashion, I should respect the pattern, which looks like it's in the middle of a larger free wave drop. So I would be looking for more weakness. Also, this basic chart, if I can say so, appears to be very clear. So notice that market always made a very strong move after a consolidation, okay? And this is why Elliott Wave theory works so good, at least for me, because it's very easy to recognize impulse and correction. So you can see sharp legs to the upside in previous uptrend, which was clearly an impulse. And in the middle, we had a very overlapping price action, which was correction. And if we consider that we have seen a very impulsive and strong drop from the highs, and now we are just messing around here, then clearly, if we respect what market have been doing in previous cycles with an uptrend, then, as you know, we could expect another similar breakdown, but in the opposite direction, because the first leg was bearish and impulsive from the top. So I would expect a similar drop here, either for wave C or maybe even wave 3. Okay, so
obviously some rebound from the Euro USD is going to help that case. Yeah. I mean, usually they spend most of the time with maintaining an inverse correlation.
Yes, exactly. So I'm also bearish, sideways or bullish on euro dollar, so I can take a look at it. And as you know, I was looking for this wave 4, but since it goes a little bit slow, I think there's a chance that we will see a triangle here. Not really sure, but the idea is that sooner or later we will see a push to the upside. Okay, I really like the fact that the previous swing high here reacted as a very good support. We bounced hardly from it, so either we stay above it, consolidating within bigger, more complex wave 4, or we go straight to the upside. But the idea is here that we will pass and probably retest those highs from early September. And then when everyone will try to, again, step into this bullish euro run, I think that it will be time to look into the other side.
Hey, Greg, it's Blake. How's it going?
Hey.
Hey, thanks for being here today. And sorry, Steve, I had to step away a little earlier. The office was calling.
I have to go now, so nice to hear you, Greg. Thank you, Blake, and I'll see you tomorrow, guys.
All right, see you, Steve. Yeah, so Greg, when you're looking at the euro dollar, and I agree with you, and you were mentioning something earlier about Elliott waves and impulsive moves versus a consolidation, and that's kind of what I look for in the markets, not as an Elliott wave practitioner, if you will, but just in general when you're talking about price action. An impulsive move, if you define it, would be an explosive move. Is that correct?
Yes, exactly. Very strong move, very short period of time.
Very strong move in a very short period of time, or and if you're just doing basic technical analysis, it's like an explosive breakout or an explosive move. And so when things just consolidate or they sit in a in a tight range, that's always a clue to me as a trader that you know, that impulsive move or that explosive move is probably going to continue at some point. And that's the way that Elliott Wave practitioners like yourself look at it as well, right?
Yes, exactly. And what is really key about the Elliott Waves is if you understand and know the rules of correction, you may have ability to recognize when correction will be completed. So maybe you can be one step ahead of the others because you know how many legs you should see within wave C if you are tracking a corrective setback, for example. So I think that the rules are really the key to give you an advantage when it comes to potential breakout point, because you can predict those a little bit earlier. So for example, you have a triangle. I know that triangle consists of 5 subwaves, A, B, C, D, and E. So if someone who is not familiar with Elliott waves, he will anticipate a breakout a little bit earlier, maybe too early. And after some days, after a few days, he will probably give up on the breakout because it will not occur. But me, if I will be able to count 5 subwaves, I'm maybe the one to catch this breakout when he will, after all, maybe give up.
Right, that makes a lot of sense. Now, if I mean, I already know the answers to this, but I'm asking for our viewers. If I want to become more familiar with Elliott Waves, you have education not only on the ForexAnalytix side, but you also have it on your site too, correct?
Yes, exactly.
All right, so you know, for those of you guys that because Elliott Wave is one of those, it's a style of trading that I have become more familiar with over the years, and especially by you know, having Greg a part of our team, I have the benefit of reading all the Elliott Wave analysis on ForexAnalytix, which has been a huge help for me. And I've incorporated a lot of that into my analysis, just doing basic technical analysis. Hey, going back to the euro, or you're looking at the DAX, but still looking at the euro dollar. This is a great example of you talking about why it could be a potential triangle. And before we head higher. Now, why is it? Can you explain to us why you would expect a move out of the triangle, but maybe the move to stop short in your wave 5 there?
Actually, I'm trying to also focus on time. Okay, I have seen over the past few years that the market when we go into the holiday season is trying to slow down. Okay, yeah. And then in a lot of cases, I have seen that in the first 10 days of January, we have seen some very volatile moves. So I would not be surprised if this breakout will come maybe in January. Okay, maybe we'll see some advance already to the upside earlier, but the real stronger move with acceleration could occur in January. And then I would be looking for potential top in first part of 2018. Okay, so it's probably from time perspective.
Right. Okay, but let's say, and I'm going to throw a curveball at you really quick. I'm going to throw something that may not fit what you're looking at right now. You know, I'm looking at the euro dollar as popping out of a descending wedge currently today. But let's say following this week and going into next week, we actually break above that red downtrend line. What looks like you might see a triangle, but let's say we actually break higher, you know, above like 119.50. So we start heading towards 120. How's that going to change your count if that happens? And I'm using that as an example just because we do have the FOMC this week. A lot of people are you know, thinking that let's say it just isn't as hawkish as we thought, and the dollar sells off. How's that going to change your viewpoint?
Actually, it's a very good point, because always when it comes to Elliott Wave, it's very important to be adjustable. Just don't get stuck with your one wave count or whatever. Always look for possibilities. So different possibilities. So actually, if we would pass this swing high at in this trend line at 1.95060 or around there, then probably I would just say that wave 4 has finished here and that we are already moving to the upside into a fifth wave. Okay, so in that case, I would probably just adjust my view and go with the flow. But it would be very important for me to see, probably I would have to wait till Friday to see a weekly close. Will these prices on Wednesday, okay, if we get on Wednesday push to the upside and then Thursday follow through, will this bullish trend remain strong till the end of the week, or we will get some kind of a reversal? So I will be probably more patient with call directly higher for a fifth wave, and then it depends how market would close on a Friday. If we stay strong, then clearly I want to follow these same bullish prices for the next week. If we just spike to the upside, I would probably stay with a triangle call. Also, I don't know if there is also a gap on other platforms, but I have some interesting gap here from December 04. Okay, and normally, as you know, those gaps will be filled. So I would not be surprised if we are getting filled here, and there is room for 120 pips to the upside. But also, those gaps, once they are filled, will try to react as a reversal. Okay, so actually, I'm looking for this gap to be filled only for wave D, and then we get a pullback for wave E, and then to the upside. Also, if we consider what has happened here, here was a gap. Okay, we filled this gap. It was very small one from September 22nd, and we filled it right here. 10 days back or so, 2 weeks back actually, and then turned perfectly down from it. Okay, so I would not be surprised if we see something similar here.
That makes sense. Okay. Hey, you know, one last thing I wanted to ask you before I know the founder of FX Street is coming here shortly, and I definitely want to make sure Dale has all the time allocated for him. I got to pull up the elephant in the room, Bitcoin, and Bitcoin has seen some volatility. Is there anything that you're seeing on the current wave count that suggests that Bitcoin is topping here, or does it look like we could actually go higher in Bitcoin?
I think there is a difference of what, $1,500 on futures compared to spot price. So when it comes to analysis, I really think we should still focus on spot prices, because this is actually the real data that you want to look at. And actually there were some health, I don't know if still is halted trading or not on futures. So definitely there will be some gaps, no real information, or definitely not enough data to be able to analyze. So I'm looking at Bitcoin still to be an uptrend, and probably the most important was this recent free wave decline from December 07. So clearly it was made in three waves. It was a correction, which means we have to pass these highs. Okay, so I still stay bullish for 18,000. And I'm not sure what this means for futures, which are already at 18,000. So probably there we will see 20,000. This difference will stay. So
right, it's interesting. So you could actually see another move up because you felt that move down to 13,000 or just about was corrective, and you're right. As far as the futures contracts go, the liquidity is very poor. There's not very many contracts being traded as of right now, and we see it. Go ahead.
How much contract do you have?
I don't know what the numbers are right now. I just had read. I was reading something last night, like the volumes were fairly low, but I don't. It was like, when I read it, it was a few thousand contracts, but it was like right at the open. But I know that it's not going to be very liquid.
Maybe it can have something to do with money requirements. I think that there was some broker who want to have. You need to have $20,000 to be able to trade one contract.
Wow, and I think that's going to be pretty much the case, and I think a lot of it is being used as maybe some hedging towards some other exposure that some of the banks may have out there. I don't know if it's going to be more, used very much as for retail, for speculating as of right now. But you know, the fact of the matter is, I think you pointed out succinctly, correctly, that we should focus on, you know, maybe Bitstamp or one of the other exchanges out there, getting your data from, because that's where all the liquidity is at right now. And we do see futures contracts, different prices, like if you're trading, you know, the pound futures versus trading the pound dollar, even though the pound dollar is probably going to be very similar as far as charts go. If you trade the pound futures, they're going to be, you know, slightly different and different in price, and they're not going to, you know, they're not going to trade one for one. So I think you know, for those people that are, I think following Bitcoin spot price is probably the way to go currently. So I think you're exactly correct. Hey, anything else? The last, you know, minute or two. Yeah, anything else that you wanted to point out for the viewers?
No, actually, not really. So I can pass your screen if you have something.
All right. Well, thank you very much, Greg. I really appreciate it, and I'll take over just a couple of minutes because I was in the middle of talking about before I got a phone call. I was in the middle of talking about the new RBNZ governor, or who just was announced, and the Kiwi actually got a nice rally from that overnight, but I still think the Kiwi is capped. But the New Zealand dollar, and Greg, are you still here really quick?
Yes.
Okay, so the New Zealand dollar has been under a lot of pressure recently, and I still have it well below, you know, 70 cents or maybe just above that, maybe like 70 and a quarter. It's still bearish, but you know, the Kiwi looks like it's trying to turn a little here higher, and I don't know if you have any views on the Kiwi dollar, and we can just keep it on my charts, it's no big deal, but
yes, I see on this triangle as well, as you have marked it.
Okay, you do. All right.
Yeah. So I see triangle that normally when triangles are formed, I notice that they can be formed at important levels. So in the downtrend, above important support level, because important support level will be retested a few times, which normally happens in the triangle before you get the breakout.
Right.
So that level right there at 68.14 appears to be very important. So
yeah, if
we can hold that upper triangle line, I think that there is still in a bearish trend.
Yeah, right. And I was looking at it this morning, and I, by the way, I was long from Friday. We had this little inverted head and shoulder pattern. I got limited out overnight, a lot further down where it is right now. It shot up further than I thought it was going to go for sure. But looking at the reaction up here, you're right. We're still in this triangle, and the risks are there are continuation patterns. So the risks are that we can still, you know, break lower from here. I'm not short right now, but I see the risks, and I totally agree with what you're saying at this point. So hey, go ahead.
Earlier, I also mentioned that Mondays can be fully retraced. The price action that we see on Monday can be fully retraced. So today we have a nice up candle, as you can see, and if this candle gets retraced fully, maybe tomorrow, and then this would be really confirmation that bulls are having some hard times to break to the upside. So
that's a great point.
Yeah, so in such case, I would be even more interested maybe to look and expect a breakdown. So
right. Okay. Great, Greg. Well, thank you so much. Dale, I know you. Dale, are you around? I would think he's around. He is not.
He's not.
No, he should be, because we have an interview coming up. So Dale might have stepped out just for a moment. But Greg, thank you so much for so much for being here. So yeah.
I'm here.
Oh, Dale is here. Okay, very good. Hey,
But what I'm saying is, I've tried to tweet. Oh, use it. Maybe that'll take you. I tried to tweet Francesc. I don't see him in the room. Francesc, if you're here, registered under a different name, please write something in the question box. But he was retweeting his interviews. He was aware of it, so I'm a little surprised. I don't see him.
he's not here yet, is he?
No.
Another China computer.
What's that? Yeah.
Another computer from China. like Dale said last week.
I haven't been able to raise him. I've tried, and you know, I don't know. It looks like it's probably a no-show. So if you want to carry on, that's fine.
Well, yeah, you know what? What I'll do is I'll carry on for just a few minutes. I'm going to answer some of these questions. And by the way, Chinton wanted to take a look at the cable and wanted Greg's view on the cable. And I don't know, Greg. I know you've got places to go, and I do too. But I'm just I'm just looking at the cable. As long as it's above 133.35, I'm not really too worried about it. But if we break through 133.35, that's going to be a pretty bearish event for me. Or basically, I say roughly we can say 133. So
actually, I'm really unbiased on cable. I don't know. I expected and waited on a breakdown month back when we were at your dot trend line.
Right.
We went a lot more higher from there. So I'm not really sure if we are going lower or higher. I'm just waiting.
It's a tough market. I mean, like I said, I lost a lot of my gains. It turned me negative last week actually, with the pound reversing. I thought the buy the rumor, sell the news on Friday really set me back. So I'm kind of with you. I'm like, I'm not 100% convinced. I'm not very aggressive being long. I'm fine with it right now. But if we get below 133, I'm going to be pretty nervous about being on the long side of this thing. What's that?
It's all over the place.
It is all over the place. It is.
On the intraday, it was up and down last week. So it's really very, very hard to trade.
It is. Abdul asked about the pound Aussie. I'm going to just cover that really fast. The pound Aussie, this is, again, like I pointed out on the week ahead video, thing that makes me a little nervous about this is that we completed a bull flag pattern. We came really close to 127% extension. As long as we're above this 176 roughly, this breakout point you can see in this blue line. Whoops, not that one. Let me grab the blue line. This blue line right here, I'm going to put that back. As long as we're above that breakout point, it's hard to be bearish, but at the same time, I am a little nervous about it not, completing a lot of patterns here, and RSI is divergent, starting to turn lower. So, below, you can just call it like 176. Below 176, it gets a little dicey for the pound Aussie. Roderick asks, how do you not know if you're not reading volume? Well, one of the reasons, and I don't know what you're asking for as far as liquidity goes. As far as the Forex market's a little difficult reading even the Forex market for liquidity reasons, and the way it's a decentralized exchange. To try to read volumes, that's why I try to read into CFTC data, positioning data at the end of the week, and read bank reports as far as what they're saying as far as accumulation or distribution goes, rather than looking at volume. Volume spikes if you actually measure volume spikes, that can help confirm, I think, a move, especially if you're talking about an impulsive move in the market or an explosive move in the market. But you pretty much see them. I mean, when a move happens, you know if it's going to be on higher volume, and most of the time it is, especially in the currency market because of the vast liquidity in it. So I don't focus as much as on volume in the FX market as I would on if I'm trading equities. I know Steve looks at it too, though. So so guys and gals, I think I addressed most of the questions that had come in, and Luca, wait, actually one last one. Greg, are you still here?
Yes.
Okay, he said, hey, Gregor, with the bond market, maybe the move into year-end with Fed and ECB going this week. I think he was just, I think we were having a discussion about the dollar index, or excuse me, about the euro, and he was just talking about the Fed and as far as bonds go, do you take a look at you look at the 10-year? I'm sure you look quite a bit at the 10-year. I mean, I know you do analysis on it. Do you see anything that sticks out to you? Because for me, the 10-year really has signaled more of a false breakdown, and actually I need to shift my views a little bit in the 10-year.
Yeah, actually, I'm somehow in similar situation like you. I just think that here are traders probably waiting on what will actually Fed do so before we get a break in either direction. So, but my long-term view is still bearish on 10-year US notes bond. Short term, I'm just not so convinced if we get a breakdown.
All right, very good, and I'm kind of feeling the same way. I agree with you. Longer term, I still feel that the bond market is going lower longer term, but maybe in the near term, over the next, whether it's a couple of weeks to the next couple of months, we might actually get a bounce near term. So I'm with you on that. All right, well, Dale, that's it for the questions. I'm going to pass it over to you if there's anything else that you wanted to share. I know your interviewer probably a little bummed out that he's not here, but hopefully he'll reschedule with you.
Yeah. So it happens occasionally. I really don't have anything to add market-wise. I think that I could offer this. It's gonna be a blue Christmas without you. I'll be so blue thinking about you. You'll be doing all right with your Christmas of white, but I'll have a blue Christmas.
Awesome, Dale. Thank you very much. All right, guys.
Well, that's tomorrow, because I'll have 10 backups. So
all right.
Great analysis by Blake and Steve, and it's always great to have the Wizard of Waves, Grega, here. Guys, this is a good season to invest in yourself and your future trading performance. So you have the traffic light page. Don't run red lights while you're shopping during the holidays, and you're going to get push alerts so you can go about your life. And if anything important happens in the market, you can count on the team to let you know. It'll go right to your phone. So with that being said, remember, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday tomorrow. Enjoy the rest of your day. Adios. Yes, we'll forgive Francesca.